Fair value gap. Then let's look at it in the real chart.
Okay, good, excellent. Yeah, okay.
So we have an impulsive move here.
Yes, I can see.
You see that this candle,
Correct.
and this candle and the next one.
Yeah, there's a gap.
The gap.
Correct, there's a gap.
The gap right here. Right?
Yes, correct.
Yeah, so this gap is what we call fair value.
So if that is the case, from the candle 2 and the candle 4 also there is a gap.
Yeah.
Exactly.
Gap.
Okay.
It's you always find gaps.
Okay. Yes, correct. That's a gap.
Now, between this and this, there's a small
There's a
gap.
small, yeah, exactly. Little gap is there. Yes.
Very small.
Very small. Correct.
Yeah.
Correct. Yeah.
Yeah. So, and this is a gap.
Next also there is a gap. Correct.
So that's what we call fair value gap.
I see. Okay. So
this is a downtrend.
okay.
And see between this candle and this one. There's a gap.
Yes, absolutely. There is a gap.
Yeah. There's no gap here. This one and this one.
There is no gap. Yes, correct. There is no gap.
No gap here.
Yeah.
You look at this. Okay, this green and this red. There's gap here.
Okay. So always we are counting 1, 3, 2, 4, 2. I mean 3, 5. Like this only we can calculate in that case. Correct? No.
Always between 3 candles.
Okay.
At least 3 candles for you to see a gap.
So I see 3 candles. Okay.
So like this 1, 2, 3.
Mm-hmm.
So 1 and 3. There's a gap.
Correct. Okay, 1 and 3. Yeah, there is a gap. It's a big gap actually.
And the bigger the gap, the better for the point of.
I see. So bigger the gap is better actually to identify the.
Yeah,
Okay.
Identify it in the market. So there's also a gap. If you look at this candle and this candle, there's a gap between them.
Correct. And there is a previous, yeah, that's a big gap actually. Yes. The previous one also there is a gap, correct? That green, can we say that green?
Red, right?
And yeah. Yeah, exactly. That's a small.
There's a little gap.
Absolutely. Yeah, there's a little gap. Correct. Yeah. Okay. So I was just checking whether I'm identifying it correctly or not. Yeah.
If we look at this and this one, there's a little gap here.
There is a gap. Reasonable gap is there.
So the wick
Yes.
is also part of the candle.
I see. Yeah, wick is also part of the candle.
Then between this green and this red,
Yeah.
there's also
There's a
gap.
big gap. Yes. True.
So that is fair value gap. So you can see a very big one.
Oh, yeah, exactly. There is a very big gap. There is a very big gap. Yes. So almost everywhere we can see this gap. Not, if not all, but most of the places we can see this gap.
So that's what we are looking for.
Okay.
So we want to be sure that between this inducement
Mhm.
and this, there must be a gap here.
Okay. Between this inducement and okay.
Must be a gap there.
Okay.
If
Yeah,
there's no
yeah. If there's no gap,
valid,
if there is no gap, then not
this
valid.
press is not valid.
I see. If there is no gap, it is not valid. Can we draw one without gap scenario? Like for example.
We're going to look at it. So I just want to identify the things you have
Okay.
to make a zone valid.
Okay. Post.
So we've talked about break
Yes.
must cause it must cause a break of structure like this.
Okay.
Because this break of structure, this
Mm-hmm.
it is from this zone that the buyers came in and caused this break of structure.
Now, for example, if there is a break of structure, but there is no fair value gap, in that case, this becomes valid.
We must see the three conditions. I've just given you two. The three of them must be present.
I see. So two.
So the third one,
Mm-hmm. Mitigated zone.
so what we mean by all mitigated zone is that
Mm-hmm.
this kind of zone now, we've seen break of structure. We've seen that the zone caused a break of structure. We've
Mm-hmm.
also seen fair value gap there.
Mm-hmm.
Now, what we mean by all mitigated is that it must be fresh.
Mm-hmm.
Price must not come there before we are looking to place a trade.
Okay.
Explain that again. So this zone,
Mm-hmm.
once
Yeah.
once price revisits this area, we can no
Mm-hmm.
longer. So let's say we have something like this. Maybe
Correct. Okay.
maybe price come there now and
Yeah.
bounce.
Okay.
So once this has happened, this zone is no longer valid again. We cannot use it again.
I see. Again, we cannot use this. Okay.
Valid zone ahead. Maybe another
Mm-hmm.
like this.
Okay.
Uh,
Yeah. So there is a new. Mm-hmm.
so maybe we see another break of structure.
Mm-hmm.
So maybe we see another break of structure happened and we see fair value gap. Then
Okay.
another zone.
Another zone.
So what we mean by unmitigated, it means that that point has not been visited. It's fresh.
Okay. Now, for example, if there is no reverse happen, there is no unmitigated zone, it is not coming back. Basically, it's just going up only. So, uh, as long as it is going up, we can say this is a valid
Yes,
zone. Correct?
price has not revisited it.
Yeah, but
It is
once we identified, for example, once we identified the zone as valid, then suddenly if it is coming back, what will happen? Maybe it is coming back and touching that zone again. So this becomes automatically invalid. So we have to cancel.
if price comes there,
Yeah.
buy it before price comes there. We'll be looking to take our entry there.
Ah. So before it, okay. Before it comes back, we have to take that entry. Okay. I see.
But
Yeah.
if
So we,
already
hmm.
visited it, then it's too late.
Okay. I see. So the time is very important in this case. Okay.
So we must look for fresh zone like this. The price has
Okay.
not.
Correct.
Okay.
Correct.
So we'll still talk about it a lot. So I just want you to get the idea so that
Understand. Yeah.
so we are looking for three major things. We want to see that the zone caused a break of structure. We
Mm-hmm.
want to, I want to see that the zone is still fresh,
Yeah.
unmitigated.
Mm-hmm.
So we're going to look at it in the market too.
Yes, exactly. Yes.
These are the basic things we are looking for.
Okay.
So the same thing applies in downtrend.
Okay. Yeah, correct.
So if this is lower low,
Mm-hmm.
this uh,
Mm-hmm.
lower high.
Okay.
This
Mhm.
okay, so we are looking
Yeah.
for fresh
Yes.
with fair value gap
Correct.
on
Okay.
it. We'll be preparing for price to come back then.
Mm-hmm.
So we are waiting for price to
Yeah.
come back.
Yeah. Then it is invalid.
Yes. If price comes back here before we see the zone, it is
Yeah.
invalid.
Invalid. Okay.
It before price revisits it. Maybe price is like this.
Still it
Price
is
is
valid.
this is still valid.
Okay.
But if price touches zone
Mm-hmm.
before we play the trade.
I see.
Yeah. So let's look at it in the market and see.
Correct. Right.
Okay, so this is gold on
Mm-hmm.
4.
4 hours. Yeah.
So I'm just going to do a quick marking of the structure.
Mm.
You can see lower low here because
Yeah.
we had
Correct.
this. This was inducement. Then we had this pullback. And this this was inducement.
That's inducement. Yes.
So and this correction. So you can see I don't have to mark the valid pullbacks on this correction.
Yeah.
This new impulsive move now, I have to mark the valid pullback.
Okay.
Okay, so once we have a break of structure, you can see after this correction, we had this break.
Correct.
Great. So the zone that caused the break of structure, that's what we want.
Agree. That's number one rule. Okay.
The zone that caused the break of structure.
Okay.
Started from this place. After this correction, that point where the continuation started from.
True.
So that's the zone we will be looking at.
Okay.
So we'll now check, is there a fair value gap there? So I can remove this one now. We'll check, is there a fair value gap?
Yeah, I can see there is a fair value gap from 1 to 3. There's a big gap. Not from that one, this side, from the right side, where the impulse started. Yeah, exactly. From there, 1 to 3, there is a big gap. So there is a gap. Yeah.
This fair value gap.
Correct. Is it how many numbers required? Is it like that? Or even one fair value gap also will work? Is it okay?
Okay, good question. We usually from the bottom. To start from this lowest.
Okay, correct. You start from the lowest one. Okay.
Where the fair value gap is. Now, there's no gap here.
2 and 4. Sorry, 2 and 4, there is a gap.
Yeah, between this candle and this candle.
Yeah. No, even this side also. I mean, even from this side also.
Good.
The second.
Now, if
yeah.
If you look at this, price came back to cover this.
Okay, so that we cannot consider.
Not consider this.
Okay.
And revisited.
Okay. All right.
But if you look at this too, price back to this low part. Even if you go to the extreme, you see that price visits this point below from here down.
Yeah.
If you go, you can see all of this place. Price has not revisited.
Correct.
So that gap is still valid.
Okay. This last point I didn't understand actually. What you mean that blue, the zone you marked there, is it because of what? Is it because of the fair value gap only?
Yeah, I'm showing the fair value gap zone.
Okay. Yeah, correct. So that fair, yeah. So why don't we write? Why don't we draw? This is extremely from the bottom. Why we kept it a little bit up?
Okay. I'm showing the fair value gap. The zone itself starts from the bottom of the candle.
Okay.
One zone now starts from here,
All right.
from the bottom of this lowest candle,
Correct. Then there
including the
is
fair value gap.
yeah. Okay. Including the fair value gap.
Hello, can you still hear me?
I didn't hear last what you said. Fair value gap we are just talking about that I know.
Yeah, okay. But you can hear me now.
Yes, better.
Can you hear me now?
Yes, I can.
Okay. I use this blue to show the fair value gap.
Okay. The blue is showing the fair value gap. Okay.
This green is covering the demand zone.
Okay. The green is covering the demand zone. Okay.
That's the zone that the buyers are.
Okay. So that is the buyer's zone. Okay, fine.
So that's the
Demand
demand
zone.
zone.
Okay.
So that's where we are looking to buy from if price
All right.
visits the.
Okay. So this demand zone we identified after considering the fair value gap and also the breakout structure.
So we can see that there's a fair value gap here.
Yeah.
It's this zone causes a breakup structure.
Correct.
So
How many fair value gap we need at least? Is it any numbers required?
for one is enough.
Oh, okay. So one is enough. I see. Okay.
Did they get that?
Yes, I got it. Yes. So one is enough. Okay. That's
The
good.
most
Okay.
extreme one,
I
the
see.
one point where the price starts from.
So one is must, but if more are there means it is good actually for us for an entry. It is good. Can we say that?
If we have more, it is good.
Okay.
Yeah. So if we have the more the fair value gap, the better. But the extreme one is the most relevant.
Okay.
One that is closest to where the continuation move started from.
Okay.
So
All right. So we identified it. Now let's say we identified the point of interest that is the zone. So in this case, maybe I don't know. I'm talking early. It's too early. But in this case, where the entry will start from? From because already the candle is gone up because it's gone up after the breakup structure. It's gone up. It is going for a short or it's going for a long in this case.
okay, good question. Now
Yeah.
we want to before we can say this zone is valid.
Yeah.
First thing is break of structure.
Yeah.
Second thing is fair value gap.
Correct.
Good. So I'll use FVG to represent that. Okay, so the last thing is unmitigated. So if you look, this zone price has not come back to it. This is the lowest point price came.
Okay. Let's say, yeah.
This is the
Okay.
lowest point.
All right. So that's the point. Yes.
Has not visited this fair value gap zone, this zone.
Correct. Correct.
Meaning this place is still fresh.
Mean this place is still
Fresh. It is still unmitigated.
Okay. Still fresh. Yes.
So let's say we already had something like this.
Okay. I see.
Something like this. We cannot use this place again.
Okay.
So
we cannot use this place again. That I didn't understand that. I mean, you identified the lowest point and it can come up to the zone. Then it will go back, right?
yeah, it's most likely going to go
Most
back.
likely it will go back. Okay. So in this scenario now, for example, our candle is extremely in the right side now. Can you touch the mouse? The last candle, I mean, the last candle. Yeah. Okay. If there we are now, right now. In this scenario, how we will identify, like, any chance to come back?
A good question.
Yeah.
First, what I'm explaining now is if price already touched like this before,
Correct. Yes.
longer use this zone.
We cannot use that zone. Yes.
Or we cannot use it again if price
Correct.
already. But
Okay.
price has not touched the zone. We can
Okay.
still wait for something like.
Okay. Okay. Got it. Yeah. Okay. So once it is touched means again the second chance we cannot wait for. That becomes invalid. Since there is a gap, that area there is a gap, we consider it is fresh, and still it can come back.
No longer fresh, we can no longer use it.
Okay. So in that case, normally we give a limit order from there to long, right? Normally we give a limit order, correct? Long.
Another good question.
Yeah.
Now
Okay.
we can use order,
Mm-hmm.
but there are two types of entry.
Mm-hmm.
So we have the confirmation entry and we have the limit order entry.
Okay.
So if you find a fair value gap like this, a valid zone,
Mm-hmm.
this 4-hour time frame,
Correct.
place your limit entry. Yes, that's one kind of entry.
I see. That is one kind of entry. Okay.
So we have limit entry. We have so these are the two types of entry.
I see.
So we've not talked about time frames, but use them for.
Okay.
So we learned change of structure, change of character, where we go from higher time frame to lower time frame, like the one you did today. Did the analysis on on daily time frame, 1 hour for your entry.
Okay. So the analysis will be daily time frame, but the entry will be in 1 hour.
So in this case now, let's say in the daily time frame.
Okay.
When price comes back to the zone, now switch to the 1 hour.
I see. So this
And
will
that
happen only after, or this will happen only after it touch the zone. The change of the time frame will happen only after it touch the zone, or we can do it in advance.
it will only switch after it visits after price comes to the zone.
Okay. Okay. So let's say, for example, it is like this now.
So we'll now switch to lower time frame.
Okay.
Confirmation entry.
Confirmation entry.
So, and confirmation entry is what you did today.
Okay.
Early going from the higher time frame to the lower time frame.
Okay.
For COC plus BOS.
Okay.
Yes, that's confirmation entry.
I see. That's the confirmation entry.
Limit entry, you don't switch time frame, you just place your order here.
Okay. So limit entry, we are not switching the time frame.
Your just place your order where your valid zone.
So more accuracy will be in the higher time frame. Correct, no?
Yeah, the higher the time frame.
Okay.
So that's that point you just made is for something else. Because this one now, we are using confirmation entry for us to increase our risk to reward ratio. Because when you go to lower time frame,
Mm-hmm.
be able to use smaller amounts to make bigger profit.
Okay. For making smaller profits, right? In that shorter time frame, I mean, small time frame.
So, for example, if risk to reward of 1 to 3,
Yeah.
you risk $1,000, you can get.
Okay.
Or if you do confirmation entry, that $1,000 you can use it to get like times 3.
I see.
3 of what you will have gotten with the higher time frame.
Okay. But it will take time, right? Normally in the higher time frames?
Yeah, higher time frame take longer.
Longer, like can we say like a week time or maybe 5 days or more?
If it's higher time frame like daily, weekly, yes, it can be up to
I see.
days or weeks. Or if it
I see.
is 4 hour, it can be hours
Okay.
or few days.
Right.
Okay, so we'll still talk.
One more question now. Can you just touch the highest point where the highest candle, the highest one after the break of structure, I mean.
Okay, this point.
Yeah. This point. Yeah. For example, we only now the last candle is there only. There is no further candles formed. So from this place, can we say that maybe it will come back and we can give a limit order or something like this? Is it possible? Yeah, something like that. Exactly. Yeah, and this is the scenario, for example.
Yeah, so if this is the case, hello?
Yeah, okay, I'm listening. Yeah.
Okay, what's the question? What's the question?
You want me to say the question? See, the question is okay. So now this is the candle actually, the last candle. Now this is a current scenario. So can I give a limit order from long? I mean, limit order from the zone. This is the
Yes.
scenario.
You can have something like this.
Yeah. So it is possible.
Depending on the risk to reward you want to target.
Okay. 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 So
Yes.
how much TP we have to keep? That is there is a rule for that, huh?
Yeah, depending on you're going to do back testing too.
Yeah.
You're going to back testing or forward testing is basically I'm going to where you're going to place another 20 trade using this.
Okay.
Your win rate.
Okay.
See how many trades did I win using this method.
Mm-hmm.
How many trades did I win using the confirmation entry?
Okay. So in this scenario, we can give only one trade, no? Because one time it came, I will touch the zone means that zone becomes invalid and that only the trade is one trade is possible, no? Again, one more trade we cannot give to that zone, right?
So once we have something like this,
Correct.
we cannot use this zone again.
We cannot use that zone again.
So that so maybe a new zone might be formed somewhere here.
Mm-hmm. Yeah, something like this.
I'll now be looking to enter from here again.
Okay, something like that. Yeah. Can we see a similar scenario in the downtrend as well? Just to maybe quickly can we have time.
So let me look for the market that
Yeah.
crypto market is actually pumping.
It's crypto market is pumping, you mean, correct? No? The market is
Yeah,
pumping
at the moment.
at the moment. Okay. Or we can go for a back test also, no problem.
I didn't get you.
Yeah. No, I mean just I wanted to see a downtrend. Any coin is okay, no problem. Just to see a downtrend, how it is working in this same scenario.
Okay, so we add a downtrend. Let me
Okay.
okay. So we
Yeah.
have something a change of trend here.
Correct.
The higher low was broken.
True.
You
Yes.
know that is
Yeah.
yeah. So
Okay.
this
That's a breakup structure, yes.
Okay, so the criteria we use to know a zone.
Yeah. The breakup structure number one. Then the fair value gap number two.
Now, the move that causes breakup structure started from here.
Yeah.
Inducement. So
that's an inducement. Okay.
this inducement and causes breakup structure.
Yeah, correct.
Although this breakup structure, let me see, is it valid? Price closed below.
Yeah.
So the condition for our zone, we must see breakup structure, one.
Yes, the one.
We must see fair value gap.
Fair value gap, yes, from that point to this point, okay.
Let's gap there.
Yeah.
Do we have a gap on this?
Okay. That gap we can consider directly. Okay. Yeah.
So remember, we are starting from the extreme candle.
Okay.
Where's the first gap we have there?
Okay.
So look at the gap.
1, 2. Yeah, correct. There is a gap. And also from that candle till the next one is a very, very big gap. Yes.
Good.
But further, there is no gap because of this pullback. We cannot consider this. There is a gap, right?
But this gap has already been visited by this.
Okay. Done. Yeah.
This you can see. So this, let me see. Let's say we've not gotten this yet.
Okay, correct. Something like this.
Yeah. So all of this will have been our zone from the point the possible started from.
Okay.
So all of these points will have been our value zone.
True. Because there's still gap.
Yeah.
Yeah.
All of these points will have been our supply zone for
Okay.
to come back for us to enter. So
Okay.
first condition is breakup structure one. Second condition,
Okay.
gap two.
So basically, the width of the supply zone is the fair value gap width. Correct, no?
Yes, this fair
Okay.
value, the
Okay.
supply zone starts at the of the candle and cover.
Okay. Okay. Let's see. If, for example, if there is further fair value gap also there, after this fair value gap, there is another maybe 2 or 3 fair value gaps are there. So then in that case, supply zone we will draw up to there. No.
If there's space between them,
Yeah.
there's no gap. It's not
Yeah.
valid. We are using the extreme fair value gap.
Okay.
Yeah. So this one actually, the gap started from here up to this point.
Up to this point. Okay.
Yeah. So that's how we cover it up to that point.
Okay. No, my question is one more. My question is, suppose after this fair value gap, this supply zone width you mentioned as fair value gap. After that, there is one more fair value gap is there. Just imagine there is one more fair value gap is there. Just immediately after that.
Let's say
Yeah,
we have
something like that. Something like this. Correct.
good. Now you can see there's gap here.
Yes.
Gap here.
Correct.
Yeah, we will not use this one. We're using the extreme.
We will use only the extreme one. Okay.
Now, it's not like price will not react from here. Price can come back, touch this one, and continue downtrend.
I
Both
see.
our chance of
Okay.
extreme one is more effective.
Okay. So suppose if the extreme one is somewhere down, where the blue you mentioned, maybe there is an extreme gap is there, for example. There is a big gap. And where you mentioned the supply zone as a small fair value gap. Imagine there's a small fair value gap in the red zone area, and there's a big fair value gap in the blue area, for example.
Yeah,
Uh,
that small one is still more effective.
okay.
So what? Let's say we are very small here, and we
Something
are
like
very
this. Correct. Something like this. Absolutely. So in this case, which one we will consider?
to the extreme.
Okay. The bottom one only we will consider.
Yes, the extreme one.
Okay, 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 okay.
It's not like price can do something like this and continue down. It's possible.
Okay, 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 okay. Yeah, yeah, yeah. Nothing will happen there, but yeah, okay.
Price can reverse from here after visiting the zone here and reverse. But we want to increase our chance of success.
Okay. So once price came like this, if any further chance it can come back to the supply zone again, because the high fair value gap is here, no?
Yeah, the most effective zone that we use is the extreme. Once it has been mitigated, we can't use it again. Once price visits.
Right.
So it's possible we have more than one fair value gap along this impulsive move. Each one of them to place our trade. But the most accurate of them all is the extreme one.
Extreme one. I see. Okay.
So if price revisits it, let's say we have something like this. If price visits here and then price breaks above,
correct.
That the trend is likely that the trend
Changing. I see.
That would be COC.
Yeah, there's a COC, so there can be a trend likely to change.
So this is higher low right here. I mean lower high.
Yeah, lower high.
Break. It helps you
Okay.
to station that the trend might be changing. Or if the fair value gap you use is somewhere here, and price does something like this.
Okay, from there, I see.
Now this one, the trend is still down. So it's until price breaks above here before you know that the trend has changed.
Okay.
So price can do something like this. If you come here,
Yeah.
it
can go back. That is not, yeah, that is not a proper trend change. It is just crossed only. That's not a proper trend change. Correct, no?
So it's until it breaks above here.
Correct.
Structure of the market.
Yeah.
So that's why we always recommend the extreme. So, though you can experiment with the lower, this other fair value gaps, especially the first one and the extreme, because you might have more than, you might have 3. Gap.
Yeah.
The one and the extreme are the valid ones.
Okay.
One in the middle is a trap.
Oh, I see. That's a trap, actually. Okay.
Like AP.
I see.
This one in the middle.
Okay. So usually people may take an entry from there, which means easy to stop loss, easy to take the stop loss. Correct, no?
So you can use all this.
Okay.
But I recommend this one.
Okay. Yeah.
Extreme one.
Okay.
Same thing if it's in the buy side. If it is a demand zone, the extreme one is up.
That is the place on. Yeah.
All right. So now if you look at this trade price, the price came to the extreme.
Yeah.
You can see.
Yeah. Correct.
So price came to the extreme. You can see the touch here.
Yeah, absolutely. Yes.
Or the downtrend continued.
Yeah. Actually, this is something that we call it like we miss the entry. Correct? No? That you are mentioning, no? Sometimes you say miss the entry means this is the scenario. Sometimes, correct?
So like in this, now let's say you identify the zone, limit entry there. Let's say like this. So let's say you already have your limit entry set.
Okay. Correct.
Maybe you
Something like this.
so that will not be a miss trade. You can see what happened there. You can see.
Yeah. It triggered.
Triggered.
Yes. Correct.
So that's one of the advantage of limit entry. But you can entry there. And I'll show you.
Yeah, sure.
So let's say we want to use confirmation entry.
Yeah.
So the way I do it is, let's say this is my zone. I place my alert here.
Okay.
I place my alert right there.
Yeah.
And that price
Actually,
touch
I also keep the alert basically in trading view, right?
trading view.
Yeah.
So immediately price touch it, the alarm is going
correct
into like this.
Yeah, exactly. Yeah.
So immediately price touch that zone, then we'll switch to the lower time frame.
Okay.
So 4 hours. So for entry is 50.
Okay.
So let me just using weekly.
Okay.
Weekly, daily.
For
Uh,
1 hour.
okay, so okay, can you still hear me?
I can see, yeah.
So if you do your analysis on weekly time frame, that's the higher time frame now.
Correct.
This higher time frame H. So if weekly is a higher time frame, will be on 4 hour.
I see.
Lower time frame.
All right.
So basically, you're marking your trend for structure. Let me use structure.
Yeah.
So you're marking your structure on the higher time frame.
Okay.
And your entry on the lower time frame.
I see.
So if you mark your structure on weekly, your entry will be on.
Lower time frame.
If you mark your structure on daily, be on 1 hour.
Okay.
On 4 hour time frame. Your entry will be
15
on.
minutes. 15 minutes, I see.
Mark your entry on 1 hour. Your entry will be on 5 minutes.
I see.
Can still go lower anyway. But I don't recommend this for a start.
That is
They're
very small. Okay.
Because very the trend changes fast on this lower time frame.
Okay. Okay. 1 minute.
So
Wow. 1 minute is so
trend change very fast here. So
correct.
you're going to practice with 4 hour and 15 minutes for now.
So for 4 hour, 15 minutes is better. Compare with all these things, which is the best we can say that 4 hour to 15 minutes or 1 hour to 5 minutes.
Yeah. So you said you like to get more trade signals daily, right?
Correct.
So The best for that is actually this 15 minutes and 1 minute, but the accuracy is lower to the rest.
Okay.
First signals on this 15 minutes, 1 minute.
I never tried in 1 minute actually. I tried 5 minutes, 1 hour. So maybe 1 hour to 5 minutes will be better for me in that case.
So you can experiment with them and see which one works best for you.
Okay.
So but we'll still talk more about that. I just want to.
Yeah, sure.
So we found this zone on 4 hour frame
Okay.
to entry.
All right.
For the change of character we talked about, the one with point of interest.
Correct.
Let's see what happens.
Fine. Yeah, let's see.
Price is coming towards the point of interest. You can see the impulsive move.
Yeah. Yes.
So first of all, let's mark the impulse.
Yeah.
Move. So this is inducement, correction, then a
Yeah.
new impulse. Yeah.
Yeah.
So remember, this now is not going to be inducement. This is
Yes,
going
it's directly change of character.
price breaks it. So let's see what happens next. Yeah.
Yeah.
Means the trend has changed, right?
Correct.
Okay, so we'll now wait for break of structure to happen.
Yeah.
So let's see if we have a break of structure. Okay.
Yes.
So we have break of structure form. Okay, so
Yeah, correct.
this is a COC.
Yeah. Continuing. Yes. And there is a pullback.
This inducement.
Yeah. Correct.
Then we have this was correction.
Yes. That's the correction.
So now we have a break of structure.
Break of structure. Yes.
So meaning the
Yeah.
trend.
Yeah. Trend change is confirmed.
We're looking to take our entry.
Mm-hmm.
Now this is confirmation entry.
Okay.
We will now use the same entry strategy. We are looking for the zone that caused break of structure.
Okay.
And we are looking for fair value gap.
Okay.
So which is this point, right?
Correct. That's the lowest point. Yes.
So you can see there's gap here.
Yes. There's a big gap. Absolutely.
So we can have something like this.
Mm.
The red sellers.
It can come up to there. Okay. Till the gap area. Okay. Okay.
So our entry now will be from here.
Okay. Correct. I see.
And
Somewhere
you
from there.
see that your stop loss can be can even be above this point. Stop loss can
I
be
see.
above this, or it can just be here. A little bit.
Okay.
Then your target, maybe you target 1 to 3.
Okay, it can come up to 3 times. Okay. Normally give 1 is 3. I will
Yeah.
give 1 is 3. Okay, okay.
Now confirmation, that's what I'm saying about confirmation entry. Confirmation entry can allow you have a bigger risk to reward ratio.
Okay, okay, okay.
Entry we
Okay.
just gave us like 1 to 2.
I see.
So let's just see what happens here.
Mm-hmm.
Can you see?
Yeah, it hit the stop loss.
Retest. And then continue. So
Continuing.
let's see what happens.
Mm-hmm.
So you can see that price did not break here. Where the
No,
trend,
that area. No, it didn't break that area. Correct.
so I mentioned that the stop loss can be above that point.
Mm-hmm.
The risk to reward, if that's where the stop loss is, you can go back to the 4 hour to know where your target will be.
Okay.
The target will be below the last break of structure.
I see. The target will be the last, just above the last break of structure.
So because if the downtrend wants to continue, it has to break it.
Mm-hmm. I see.
That's where the first take profit should be.
Okay.
So for the limit entry, your stop loss this place.
Okay.
The limit entry that we talked about the first. Stop loss needed to be above here.
Okay, right. Yeah, just above this.
For confirmation entry, the stop loss doesn't have to be up here,
Okay.
but it needs to be above the point where the trend change on 15 minutes time frame.
Correct.
So we'll still talk more about that in details. So
Yeah,
this
yeah.
is
Will. They just gave an overview. I think we will discuss more about the entries. Correct, no?
so the stop loss in this case on this 15 minutes has to be above this point where the trend start changing.
Okay. I see.
So with more practice, you will get used to it and see what works best and watch which
Fine.
time. So
Okay.
there now is the same thing if you're using weekly and 4 hour or daily or 15 minutes and 1 minute. Is the
Okay.
same.
I see.
Yes.
Fine.
So
What will be the what will be the
so
homework? What will be the homework for me, Mr. Kevin? What will be the homework based on this?
work is identifying the valid zones.
Identify the valid zones. Okay.
Because the key thing we did today is those three things where we know the break of structure, the fair value
Okay.
gap, all
Correct.
mitigate.
Break of structure, fair value gap, and the what's the third name? I forgot. The third name. Yeah. I know. I will reply. Yeah. I will reply. I will replay the video.
So the zone must be all mitigated.
Yeah.
Well, okay. If you replay it, you find it anyway. All right. So do you have more questions?
No. This is very clear actually. Very detailedly we discussed actually today. So when I do the when I do on the chart, definitely I will have more questions.
Do enjoy your day.
Yeah. Thank you very much, Mr. Kevin. Thank you so much.
Are you done?